Good afternoon. The market had a pretty tough day today. It was way down and it managed to come back some. And I think it's mostly due to the coronavirus. Now all of a sudden the companies are coming in and they say they're missing earnings or they're going to miss earnings because of the coronavirus. And that's throwing uncertainty into the market. I mean, the supply chains for many companies are getting disrupted. And so the unknown, I think, is making the market very skittish. So what you do in times like this is make sure you have a low beta portfolio. And I'll show you how low beta portfolios work today. This one is one I started in January 3rd. It was up today. It has a low beta, it has a 0.64. It has a high yield. The yield is 12.2, so I mean we've just been 2 months into the year, and with a 12-point yield, we still have 12% to go on this portfolio. Most of the earnings are not in yet, so it's already up 11%. It's soundly beating the market, and it does well when the market is not doing well. The other one that did really well today is the monthly pay. This portfolio kicks out 8.1%. It's up 5% for the year, which is almost beating the market. And it has a beta of 10. So it doesn't react to market conditions. And today it was actually up 0.63, considering the market was down 0.39, the S&P. It's doing well. So, and it also has a monthly pay, so it pays you 60 times a year. All of these portfolios have 5 positions, so they're scalable. You can start off one of these portfolios with $500 or $1,000 and just divide it equally between the positions. And the last one, I call it 5 stocks. I did a scan and came up with some really good stocks a while ago, because a lot of people aren't looking for yield. If they want something, they want stocks that are going to perform. These are really good stocks. They have a beta of 0.48. So considering what they've done, that's a very low beta. And today it was up 0.37 while the market was down 0.39. So that's a really good swing. It's almost an oxymoron to have a high growth defensive portfolio, but this seems to be fitting the bill. So this one is up 16.8% this year. So it's beating the market. You can have more safety in this market with a low beta portfolio, and when you have days like this, they generally outperform. So once again, this one was up 0.61, and with a low beta and a high yield. The monthly pay is really doing well. I was kind of surprised with that. That's 5 positions. MIN, you can see what they are. If you wanted to duplicate this portfolio, it would be a good one to duplicate if you want monthly pay and you want to get paid 60 times a year. And this one would be a good, if you have like an IRA or something, you want growth and you want dividend, because the yield is 12.2%. So it would be really appropriate for 401ks, or not 401ks, but IRAs, Roths. And even if you just say, hey, I mean, I want to get some market growth, and I want like the somewhat guarantee of the yield, you do this. So that's it for today. I just wanted to show you how these types of portfolios do in uncertain times, and they generally outperform the market, and they did that today. Thank you for watching, and I will give an update tomorrow.